CEO Money. I'm Michael Yorba. Thanks for joining with us. All right, my guest is Tom Weickgenant. He is the Chief Tax Strategist with Economic Strategist. With me today, Tom, welcome to the show.
Good to be here, Mike.
Thanks you're here. Thanks for being here. All right, you have an illustrious background. You are an out-of-the-box thinker when it comes to tax and tax strategies. Give our viewing audience some idea of your background, how you got into the business, and I also want to, don't forget to tell us the significance of your birthday.
Okay, well, you might say, many people say I was destined to be an IRS enrolled agent. My birthday is April 15th, and to top it off, my dad was an enrolled agent. So what can I say? I couldn't get away from it. And I also had a desire in my life to help people, to really help people deal with their biggest issues, which many people are afraid of the IRS. And so I like to take their worries away.
Let me get into this. Some people out there don't know what an enrolled agent means. Tell our audience what that means.
An enrolled agent is someone who passes all three IRS special enrollment exams. And then once they do that, they get screened by the IRS, background checks and everything, and then they are authorized, they are certified in a way to represent people before the IRS in audit, in any situation, just like an attorney or a CPA.
Why did you become an IRS agent?
Well, I really have wanted to help people all my life. I wanted to find my purpose, and I have just found as I got into this more and more that this really satisfies me.
All right, some of the biggest challenges owners and entrepreneurs face. Break that down for a soundbite for us, if you will.
Well, one, they all want to make a profit. Mm-hmm. And two, they they need someone to bounce their ideas off. And very often, small business entrepreneurs just don't have anyone to talk to.
Right.
And so they need a trusted advisor. And I love to be that trusted advisor. I'm very entrepreneurial and want to help them succeed. And so I give them that ear, that place to bounce things off, and I'll give them my advice, and if I think it's going to work, and what the ramifications are from a tax point of view as well.
Okay. Let's walk through some of the processes that you work through to help your clients overcome and go through some of these challenges that they face on a day-to-day basis, especially when it comes up to tax time.
Okay, when they come to tax time, they're very concerned because they had a great year, and maybe they've paid a lot in, and they'd love to see a little of that come back, or maybe they didn't pay enough in, and they're getting nervous when it comes closer to April 15th. And so we have a product that can actually help with that in a very special way.
I want to know about that instrument at Economic Strategist. What is it that, how do I put this, that makes it so different from anything else that's out there in the market right now?
Well, there are a lot of trusts out there. Most of them are grantor revocable trusts. Mm-hmm. This instrument is a non-grantor, irrevocable, and it's complex and fully discretionary. And to top it all off, it's fully compliant with the IRS Code 643.
Now, I was talking to somebody about that, and he says, look, I'm a real detailed guy, and I want to understand what is it. I deal with trusts all the time, but what is it about this 643 that separates that from anything else, or what it is that you're doing, the spendthrift part of it? I mean, there's got to be some secret sauce in there.
Well, yes, and it's a real nice secret sauce, because really when it's implemented properly and the trustee comes up, say the trust owns property and it wants to sell some property and it's going to make a huge profit. Well, capital gains, as long as they go back to the corpus of the trust under Rule 643, are not taxable. No more Section 1031 transactions, and those are very they're just a pain, and people would rather not go through that. They'd like to take more control of their lives and their investments. And the other thing that 643 does is you can, all the cash flow that comes into the trust, all the income, such as leases, such as just rents and all of that, and any sort of income, miscellaneous income, business net income, K1 income, that can also be declared to be an extraordinary dividend and non-taxable.
I was just going to ask you about that. That is a very different feature that I've heard about this product versus the other ones. This extraordinary dividend is different.
Yes, and the only way it can work is if it's a non-grantor irrevocable trust, and because you're fully separated from your assets when you get into this instrument.
Now that leads me to my next question. You undoubtedly have an aha moment every so often when you're talking to somebody who's sitting across from you, and they've, by the time they get to you, they've been through the gamut, the ringer, and they all of a sudden the light goes on. Tell me about some of those moments.
Well, it's always kind of fun because I like to draw on the whiteboard.
Okay.
Get to act like a teacher. As an accountant, you don't get that too often.
Right.
And so I get up there and I draw out how it all works, and they just can't believe it. And they say, wow, and they really get excited and it's always fun. Every single time it's the same reaction, that I can really do that. And I say, yes, because you've got the life you used to live, the way you did business, and now you've got the new way where you're dealing with this unrelated party, a non-grantor trust. It's its own entity. And so you can make these deals and it makes it work.
Now you change lives for people. You change their life. That's the aha moment. Give us some example, without naming names, of a dramatic change in somebody's life when you became involved and showed them the right way to do this.
Well, in many ways, they're facing, say, $1 million in tax liability. And not only do we get to protect all those assets, but at the end of the day, we can save them a good $900,000. It's deferred. And so they can put that money back into their business. They can use it to give to any charities, whatever. They have more available to put to use in a way that they determine is really necessary. They don't have to give it all away to some faraway bureaucrat.
So those are some real big changes in people's lives. I mean, now I understand it's not, you don't approach this as with a tax strategy in mind first. You approach
Correct.
it as a protectionary device, something to give you privacy.
Exactly.
But the afterwards, the benefit that you get going forward as a business strategy.
Yes.
I can see that work. Does it work for everything, or is it just?
No, it doesn't work for everything.
Okay, let's cover that a little.
It doesn't change the character of W-2 income.
Right.
W-2 income cannot be changed. W-2, you pay tax on it, and your qualified income, such as pensions and 401ks, IRAs, it doesn't change the character of that. However, about every other form of income, you put all your investments in there, and all the capital gains, the dividends, the interest income can all be declared as an extraordinary dividend. And so all subject to Rule 643 and being deferred.
So you can't put a publicly traded company in there, but if you are the founder, the CEO, or one of the officers of a publicly traded company, you can put the rest of your assets in there and derive great benefit from it on the upper end.
You can put all your assets in there, including any stock that you own. And so once you put your stock in there and the IPO takes place, that capital gain that you have on that stock is not taxable.
That is huge. That is a life-changing
Yes.
event, isn't it?
Certainly is.
Gosh.
It's exciting. And believe me, as someone who knows that they're about to sell something big and make a huge profit, when I tell them that, now that's an aha moment.
All right. Tom, thanks for being a guest on today's show.
Well, it's really good to be here. Thank you.
Pleasure. You've been watching CEO Money with Michael Yorba. Thanks for joining with us. Don't forget, like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.